What's up, you guys? Matthew here. Let's do a detour back into crypto real quick. I know I promised I would get to like the Ralph CLI agents and stuff like that. We're going to do that. But I want to do a quick detour back into crypto because the market crashed and I feel inspired to give a market update for all my peoples. Do a little hindsight analysis, some Monday morning quarterback. And let's see what happened. Let's analyze the wreckage, see where we are, what's the current state of crypto now that we're here, right? So let's start in the beginning, Adam and Eve. I'm just kidding. When I first started the channel, I started posting in 2023 about meme coins, saying that Pepe just launched. And I was like, wow, Pepe coin. Everybody loves Pepe the Frog. Let's trade meme coins because there's a halving event coming up for Bitcoin, which was a catalyst in 2024, sometime around mid 2024. Let's just say it's right there, where the Bitcoin supply gets a little bit more scarce in the sense that the subsidy to reward people to secure the network gets cut in half. So half the amount is being introduced compared to the previous 4 years. And that's how Bitcoin operates. It's disinflationary on a 4-year cycle where the subsidy gets cut in half, right? Now, I said that was going to be a bullish catalyst because when you combined lower supply with increased demand from institutional adoption like we saw this year, then you get upward price action. I said this year in 2024, the year of the halving. But anyways, where I got basically the time from was the time it takes from the halving to the top of the market was based on the time it took from the halving to the top in previous cycles. So I said if the halving's here, then the top would be somewhere based on previous cycles between April 2025 and October 2025. Now that time frame was correct. However, my price targets were incorrect, and what I said would happen was that we could go anywhere between 200,000 and 500,000. And that was just incorrect. So if this is the halving right here, we got ourselves the halving right here. And this is our target right here. This whole area is the target. The time it took from the halving to the target was correct, but the price action from where we were to the target was incorrect, right? So I got, the x-axis correct, but not the y-axis. It's a shame, but, things could be worse from where we were at. I think it was like right around here, right? Bitcoin did do, 347%. That's decent. Hey, you got to give it to me. That's pretty decent, but it didn't hit the target. So I apologize if you were waiting for the target and it didn't hit. You shouldn't listen to people on YouTube, right? It's just kind of your fault. I'm just kidding. I'm sorry, guys. I'm sorry. Please forgive me. But anyways, it looked good. Things were looking great. You know why? Because Bitcoin was being adopted by institutions at the same time as there was a halving event, and things were looking great. It just didn't reach the target. It got about halfway there. I mean, it did pretty good, but the problem is that now that we're here where we are now, having Bitcoin fall by about 50%, that is problematic because it looks like we are entering a bear market, not only based on the x-axis time frame that I previously mapped out long ago on this channel, but based on the fact that we broke these moving averages. If you put in these different moving averages here and you show them, sometimes people watch these lines, and whenever Bitcoin crosses this line here, goes like that, retests it and goes down, goes like that, retests it and goes down, it's cooked, you guys. It's cooked. And in fact, it often, after it breaks down below the red one, it breaks down below the blue one for a little bit even. So now people are wondering what's going to happen if Bitcoin usually goes down 70, 80%. This is like the normal Bitcoin bear market. This is normal, you guys. This is what everyone's thinking. So they're thinking we're going to go down to like 25,000 basically. Now, this is a problem because Bitcoin is supposed to be an exponential asset, and everybody was classifying it as that. I, myself, made plenty of videos where I did the whole thingamajig, basically, where you put it on a logarithmic scale here, and you say, okay, look at this. We've got different orders of magnitude showing. In Bitcoin here, it could be very well on a linear trajectory on a log scale, thus being exponential and just being a little bit behind schedule here. And it's only a matter of time before we catch up and reach our, millions by 2030, right? That was the whole projection. It was an exponential projection based on orders of magnitude, based on the supply dynamics and the stock to flow model, right? So I don't need to review the stock to flow model, but I just need to say that people did think that Bitcoin was exponential. And the huge problem now going into this next halving event in 2028 from the positioning that we are now, what's actually happening is that Bitcoin is petering out on a log scale. Bitcoin is petering out. And what do you get when you peter out on a log scale? I kind of overdrew this a little bit. What you get is an asymptote. You get something that approaches the line. Now, I'm not saying this is the correct analysis. I'm just saying that when you switch your analysis from something that's linear on a log scale, exponential, to something that's petering out on a log scale, that's kind of asymptotal on a log scale, you're kind of switching your analysis from something that's exponential to something that's incremental. So if it's now incremental, we're looking at a different kind of projection. We're looking at something like, it went 10x here, and then it went 3x here, and now it just went a 2x here. Now, you see the problem with the 10x, then the 3x, then the 2x? It's not exponential. And so now some long tail concerns come into play, because what we've enjoyed here so far throughout the entire career of Bitcoin, if we consider it like a basketball player, like LeBron James, I remember that was a metaphor that Michael Saylor often would reference. He was saying that Bitcoin's volatility, you wouldn't not take LeBron James right out of high school just because he has a volatile temper. It's a crazy thing to say, but you wouldn't not pick him on your team just because he's so young, potentially volatile. He's LeBron James, and obviously LeBron James performed well. And Bitcoin, going from 0 to 1, performed well, just like someone early in their basketball career. Terrible analogy. But anyways, that was the whole analogy. But if you take that way of thinking of things, and you're saying that from going to 0 to 1, it's a good bet, when does it stop going from 0 to 1? When does it stop going from 0 to 1? Has it stopped going from 0 to 1? Has it stopped going from being born and so early that it starting to be adopted? Going from 0 to 1 is exponential in terms of price action. When will it stop doing that? Has it stopped doing that? I think it stopped doing that. I think it's pretty clear that it stopped doing that. And now you just get old crusty LeBron. And what's the difference between teenage LeBron, where you accept his volatility, and old LeBron, where you're just tired of his shit and he's all political and stuff? I think that happens when you get the diminishing returns. Once you get to 2x, in fact, you go from a 10x to a 3x to a 2x. Once it gets to a 2x, that's problematic. Let me explain why. It's called the Bitcoin halving event. That means it gets cut in half, right? But what gets cut in half? Like I said before, the subsidy gets cut in half. Bitcoin, it's not only a subsidized network. Who is it subsidized by? It's not subsidized by the US government. It's not subsidized by any government. It's self-subsidized. See, what happened was, in the beginning, Satoshi Nakamoto, when he created it, he set aside a percentage of the supply. There's still a cap supply. There's still a finite amount, but that initial amount that was set aside in the beginning is used as the subsidy. So it's self-subsidized. And the fact that people trade the coins based on the floor price that it costs to run the mining equipment, being like the first floor and stuff like that, kind of bootstrapping the value of it. It costs X amount of electricity to mine 1 Bitcoin. Therefore, 1 Bitcoin couldn't be worth less than that. right? So, and because that generates some form of security, which creates usefulness in the real world for people to do things that they couldn't do with other technologies, such as send things across distance in a way that's transparent and secure and it can't be censored. And the fact that Bitcoin is uniquely useful for that, and the fact that people need to run a certain amount of electricity in order to generate that utility gives it a floor price that is justified entirely by its own utility, right? And so you can't argue that, right? So people, they kind of all try to argue that, but I don't like that. Anyway, so I had to just say that real quick. But anyways, because that's the case, you have a floor price for Bitcoin, but then you get the whole economics behind the tokenomics. So the economics are in the tokenomics. It's in the name, right? So what I'm saying is that basically when you cut the subsidy in half and you're paying these people who provide the utility for the network half the amount, you better hope the price goes up 2x in the same time frame, 4 years, in order to make them whole. And that's kind of ignoring a lot of the different aspects of the dynamics of the competitive business landscape for mining operations. Because it's not just, all the miners are just getting a clean 2x. There's more miners joining, and there's these different adjustments in the system for difficulty and different things like that. All in all, if the people collectively don't get a 2x on their investment, you can see how when the subsidy gets cut in half, that could be problematic when you're running a business that's lean, based on margins. And that's not all of them, but it's some of them. And a lot of the mining operations don't run on disparate forms of energy. They're not all running volcanoes in Ecuador, getting like free energy. They're not all running solar panels and stuff like that. They're not getting free energy from waterfalls and dams just to get free Bitcoins from that. Some of them are, and they create a nice floor for the security, but not all of them. And the ones that are leveraged, the ones that are operating on a thin margin, a lot of them, a lot of the miners that provide the security, they need Bitcoin to appreciate in value. You can see how that's problematic. And the subsidy, it only ever gets cut in half. And so because it starts to become problematic when the subsidy gets cut in half at the same time as Bitcoin only goes a 2x, if next time when there's a diminishing the term, Bitcoin doesn't even do a 2x, that becomes extremely problematic. That becomes so problematic that a lot of business models that are used to operate a mining operation aren't viable anymore economically because this subsidy is over. Now, subsidies are normal. Subsidies are a way to make a market that shouldn't exist because it's not actually useful yet, but you need to make the market so that it can become useful because its usefulness is a function of its network effect. Think of it like any other technology that requires network effect, like Uber. Uber requires network effect. So in order to make the market, you need to make the network effect by subsidizing the Uber drivers, making it cheaper to ride Uber than to drive a taxi, and paying people more to drive Uber than to drive a taxi. And so if you put pressure on both of those inputs, then you can subsidize an industry such that you make the market and make an ecosystem viable by giving an incentive to be there to bootstrap the network effect to have more people there. So that's how Bitcoin works and any other crypto works, except it's not subsidized by venture capitalism like Uber. It's subsidized by its own tokens being set aside in the beginning and then rewarded in a way that's cut in half every 4 years. So that's the economics of it all. And so it's normal to subsidize an industry, but when you're self-subsidized on a strict programmatic schedule like Bitcoin is, there becomes a hard due date. You can't do another raise. If Uber didn't become viable before it ran out of capital and didn't have enough runway to continue to make the market to get the people driving the Ubers and riding the Ubers, if they didn't have that, they could just do another raise fund. They raise more capital, right? Another series raise, whatever you call it there in venture capitalism. They get more money. Bitcoin can't get more money. It's hard coded in it. So yes, it's a hard coded catalyst where the supply, the inflation of the circulating supply gets cut in half. So yeah, disinflationary is nice, but it's also disinflating the subsidy that provides the utility, which becomes problematic. Lower than a 2x return every 4 years. All right, I hope I've made that clear enough. And this is called the long tail security issue of Bitcoin. And so this is the problem that I think is most relevant to the fundamental analysis of the actual underlying network, the technology itself, and the economics behind the technology. It's the fundamental analysis, which I think is the correct analysis to analyze the long-term prospect of Bitcoin, not anything that these people who choose for whatever reason to misunderstand Bitcoin and say things like, it's not physical, you can't even hold it. It's like, the argument around whether Bitcoin is viable or will change the world or not is basically like, two different sides of the argument that believe in untrue things, and they just say things that aren't even true over each other and never meet in the middle or counter each other's arguments and never actually even approach the real debate that is the long tail economic security sustainability of the network. That's the long tail risk. But then you get these you get these panels on like CNBC where they invite these serious investors and these serious analysts. And one guy's going to go up there and he's going to say, there's a finite supply. And he's like the Teddy Ruxpin of crypto. And he's like, finite supply and Bitcoin, encrypted energy and all this stuff. And then you get the other guy, he's going to come and say, I can't even touch it. It's not even physical. And then they're going to end the segment and everybody else is going to be stupider now having heard it, right? It award you 0 points. And that's basically how the world works with like everything. It's usually two people arguing over each other with incorrect premises and nobody actually has a real debate. And that's what I hate. So I have to make this video to share with you guys what I think is the real take based on the fundamental analysis, not based on superficial arguments that don't land anywhere, that aren't based on anything real, that are just more or less colloquial ways of saying, I don't like this. And you're like, well, I love this. And you're like, well, I don't like this. Yeah, we know you don't like it and we know you love it, but can you guys actually debate each other in a real way that actually you counter each other's premises? That's how you debate. You have to meet each other where you have to clash your ideas. You can't just, one guy talks over the other guy talks over the other guy. That's how every debate is. So I've ranted enough. Where we are in general, given that the subsidy isn't enough to sustain the long tail economic security, is that we're at a place where Bitcoin potentially has to pay the piper and has to become economically viable. And in order to become economically viable, I think there are two different roads. First road is the road everybody hopes for, and it's kind of like the copium road, where even though Bitcoin has failed to scale and become useful enough to be a peer-to-peer currency in order to generate enough fees so when the subsidy ends, there's enough volume to pay the miners to secure the network to keep it useful, right? If that's how it works, and we can't become a peer-to-peer currency, then the only other option is for the government, the US government, to adopt it as a reserve currency, which it already has, but also to settle central banking settlements on the network, to use it as the actual global settlement layer for big, large transaction settlements, right? Instead of other forms of settlement. Everything settles on Bitcoin in mass, kind of like these big bulk transactions settled on the network. And that can save Bitcoin because it can give it a place in the economy that generates enough volume on the network that's based on real economic volume that supplies enough sustainability to keep the thing alive. That's like one realistic route, and you could see it as a power move where the United States government kind of chooses crypto as its, new mode of hegemony. But there's all these different arguments for why modern monetary theory is better than something that's, I guess, not Keynesian, more Austrian economics like Bitcoin. Going into like a hyper deflationary AI super cycle, I've heard that argument before, but Bitcoin itself being kind of like a more Austrian thing, it could lend well to a situation where people are more afraid of inflation. So it's kind of depends on whether you think modern monetary theory is more equipped to deal with the exponential era of innovation, or whether you think Austrian economics is. And I kind of lost my train of thought, but if where we are in crypto is basically just waiting for these long tail economics to play out, waiting for scale to play out, or for the government to adopt it, or for peer-to-peer currency, right? And there's only a limited amount of options. You're kind of stuck hoping for the U.S. government to adopt it. It's kind of what I'm saying. Now, let's say we try to be cypherpunk about it and be like, let's make Bitcoin into peer-to-peer cash. And it's like, we literally tried that in 2016 and all of that during the Bitcoin forks, where we, I was like, no, let's do Bitcoin Satoshi vision. Let's do Bitcoin Cash. Let's try and make it scale in these different ways. And everyone just chose the slow and old Bitcoin and chose to bury their head in the sand about the whole scaling debate. They chose to bury their head in the sand and say Bitcoin is not cryptocurrency. It's a crypto asset, and you hold it. You don't use it to transfer, and we just rely on the subsidy. But eventually we'll get layer 2s going, and the layer 2s will be peer-to-peer currency, and then there'll be enough volume. So over the next 100 years, it'll eventually happen. But the problem is, if you don't hit a 2x next cycle, you have to pay the piper now. You can't wait 100 years. So, this whole time you're saying, let's just wait 100 years for it to work out. And right here is saying, okay, we're done waiting 100 years. We want sustainability now. You need to generate economic volume now, or else your security model is actually at risk. Your whole utility is at risk. So that's a problem. That's a problem. And to add to that, Ethereum as a layer 2 ecosystem, a roll-up ecosystem, ignoring the fact that they just threw away that roadmap, that's more drama. But just going off of that roadmap for Ethereum, for rollups, we already know that if Bitcoin tried the same thing, it would probably end up the same way as Ethereum did, where all of the rollups that are supposed to help Ethereum scale, where you have layer 2 chains, like these smart contracts on top of Ethereum that everyone can trade within the smart contract, and it settles bulk transactions on Ethereum so that you can get higher throughput than the initial network can allow. We already know that whole entire ecosystem kind of cannibalizes the fees, because if you make the fees low on the layer 2s, nobody's spending money on fees. So the economic value that's being generated, the volume, the pricing for your fees to use the network, gets so low that million people can use it, yeah, but they're not paying you basically anything for it. And so when you go and implement something like that, you cannibalize your own economic value through efficiency. And the problem is that more efficiency is supposed to mean more use, because Jevons paradox is basically where when something becomes more useful, more people use it. So if there's more, flights going to, from here to there all across the world, more people are going to take flights from here to there. If there's more stuff to go around, more people are going to consume that stuff that's going around because they can, and they find more use for the stuff because it's going around. So that's what you hope for when something becomes more useful. But the problem with Ethereum is that it creates scale. It creates scale that diminishes and cannibalizes the fees at the same time, while not providing a decentralized system that is also scaled in that way. Because the way they scale with the layer 2s is those layer 2s are centralized. So they're not decentralized. So they're not uniquely useful. They don't provide a unique benefit when somebody uses them. Why not just use your own server, right? So what I'm saying is that it cannibalizes the fees because they're so cheap over there, at the same time while not being uniquely useful. So it can't benefit from Jevons paradox, where things that are more useful get used more. If when Ethereum gave more throughput, gave more block space, more supply to the economy, and it was used more in proportion with the amount of throughput they gave, then maybe the decrease in fees met with 1,000,000 times more users wouldn't matter, because because it can be used more, and so it is used more, and so it becomes economically viable even though you lower the fees so much on the layer 2. That was the hope. But when you create the layer 2s that are centralized, you sacrifice the thing that makes them uniquely valuable to the world. And so then now you get no Jevons paradox. It's not uniquely useful. So you're just lowering the fees, but then not creating something that's more usable. You get what I'm saying? If they created real layer 2s that were actually decentralized, and the world found that they were useful for specific things because they were decentralized, then it wouldn't matter that the fees go down to pennies, because the fact that the fees goes down to pennies means that billions of people can use it. And because it's decentralized, billions of people will use it because it has a unique benefit compared to other systems. But when you create a centralized system that has pennies for fees, it's not uniquely useful. And so nobody uses the system. Millions of people don't come because it's not good for anything. Now you just cut the fees for no reason, and you cannibalize the economics of your system. So the same thing that's true for Ethereum is the same thing that is true for Bitcoin. If Bitcoin were to even entertain the idea of scaling, which they haven't even entertained for like a decade now at this point. It's been since 2016 since the space entertained the idea of scaling Bitcoin in general. Now they do try to this day to scale Bitcoin with layer 2s, but everything I just said about Ethereum applies to Bitcoin and its layer 2s as well. You cannot create a centralized layer 2 and then have it be uniquely useful in a way that when the fees go to zero, billions of people actually use it because it's uniquely useful. You can't have that happen if you make a centralized one. You can't. And it's very hard to scale things in a decentralized way. It's very hard. We've spent decades on this. And so this is my fundamental analysis of where the technology is at. And because that's my fundamental analysis, I think a lot of the different takes that people have about where we are in the market are incorrect. A lot of people attribute these fundamental flaws of the underlying technology. They confuse that with different problems. Some that are non-existent, like, oh, Bitcoin isn't physical, and others that aren't as relevant, that might be secondary, that might be even tertiary to this main fundamental primary lack in sustainable economics and utility and scale and usefulness. Which makes you ask the question, what is crypto useful for in its ideal form? If you were to be able to scale in a decentralized way, what would actually happen? Would we see more adoption? That also is unanswered, in the sense that a lot of people don't even see the ideal form of the technology as uniquely useful, because they don't care about the things that crypto solves. Therefore, it's not a problem. So if nobody cares that their, digital ID is coming, if nobody cares that their, data is being sold and they get shown ads based on that, if nobody cares, then even if this was in its ideal form, it wouldn't be useful for anything. So crypto is buried under technological limitations, under cultural irrelevancy, and it's obvious right now, headed into this bear market, after the delusion is over, after the whole dream of constant greater than 2x, off a subsidy is over, and you have to actually pay the piper with economic value. People are just now realizing all of this. And I've said a lot of this during these run-ups. I said a lot of this while I was at 100K. I even posted the video on saying, like, oh, I don't know about the market. And I kind of said this when it was high, right? So, it's not like I'm here screaming that the technology is going to change the world at the highs and then telling you that it's failed at the lows. Literally already acknowledged all of this when it was above 100K. So don't Get mad at me for that. But I'm just saying, it's a long road if we were to actually get this stuff in its ideal form and then ship it out to people and have them know they want it and solve all the problems of the world and increase the scope of the service offering from DeFi to decentralized compute to, world supercomputer to a full-blown metaverse that crypto is the rails on, that makes things consequential in the metaverse because it's actually financialized and immutable in a way that can't be changed, therefore consequential, therefore making the metaverse a real place with consequences. And then when you combine that with a compelling world, you get a full-blown metaverse. And that was the dream. And my friends, it's over because crypto did not scale. It did not scale. And it has not scaled. And it can still scale. Therefore, we are simply .com bust has already happened. And your job now is to find the next Apple and Amazon. People say that crypto has no opportunity left in it because all the opportunity has already been had. And the way they phrase that is there's already ETFs, there's already all of these investment products. Adoption has already happened. You're no longer early. But that's mistaking speculators as users. That's mistaking investment products as real services on the chain. It's not how things work. The fact that people are investing in ETFs that contain in them vaporware networks is not adoption. It's literally not adoption. And so you are, by definition, still early to a technology that people are realizing is 20 years earlier than they expected, or maybe took 20 years, or will take 20 years longer to reach scale and efficiency than they originally thought. That's what's the repricing right now. We're not repricing based on the fact that crypto has been adopted by the world and therefore there's no longer any opportunity. It's being repriced as a failed experiment that technically can't scale, that we had overblown expectations about its ability to scale, right? So we're that early. We're 20 years earlier than we expected. But people want you to believe that the reason why it's going down is not because it's a failed experiment, it's because it's been adopted, because we've already hit the ceilings. Guys, if we already hit the ceilings, if it was being adopted and the reason why that there's no longer any opportunity left is because it's reached adoption, full adoption, it would trade like stocks. It wouldn't be crashing. It would trade like stocks, and there would still be more opportunities than now when it's a failed experiment. You would rather have it be where it's fully adopted and it trades like stock and there's more opportunities because it's actually useful, because it's scaled. You would want that. You don't want it where Bitcoin is a failed experiment, Ethereum is a failed experiment, and all of these other cryptos, even if they're solving all of those problems, get generalized in that same basket and go down even more than the main two because the main two failed to scale. So there's this repricing based across the board based on lack of scale, and then a mispricing of the specific tokens that are solving these problems over the 20-year horizon. And that's the difference. That's where you find the next Apple. That's where you find the next Amazon. You have to think in 20 years now for crypto. You can't think in terms of, the next cycle. I think the next cycle might even confirm a multi-halving cycle bear market, potentially, especially if Bitcoin doesn't get out of here right now, especially if the US doesn't adopt it. People start to question the long tail security model in a serious way, in the discussions on CNBC stop being, there's a finite supply and I can't hold it in my hand. If the conversation on CNBC starts to actually talk about the real issue, then it's really over, right? That you want them to continue to bury their head in the sand and somehow think that it's sustainable, it'll somehow be sustainable in the future, and you just hope on that. We can bank that the subsidy doesn't end for 100 years, right? So it doesn't matter if it gets cut in half, it's at least something, right? So let's all bet on it going in the future, and you still get the hash rate go up because people are betting on it going in the future. They just go into debt, right? That kind of thing, it can happen still, and we can still bury our head in the sand for another cycle, but everything I said remains true. Everything I said remains true. And so your job is to find What's the thesis that broke? What's happening? Why are prices never going back up for some of these altcoins? Partly because they were VC extractions, but the ones that are building real technical things, a lot of them are just being punished, even if they're solving the problems for the long term. So that's what I have to say. There are opportunities. And I think one of the main narratives that kind of failed was that crypto was supposed to be a world computer. And now it's being kind of diminished from world computer that everything could more or less be run on to the DeFi machine, which is purely financial and about 1% of the initial promised scope of service offering, a whole metaverse where everything goes on chain. Now it's just niche DeFi, and they're trying to relabel crypto as DeFi. In that, if you're going to cut the scope of service offering, into 1/100th of the initial expected scale and use case, then naturally you're going to get a huge repricing across the board. But it's a mispricing for the ones that actually do fulfill the world computer, the use case that is 100 times more scope of service offering than purely DeFi financialized systems. So that's the bull case. That's the thesis that I think will win in 20 years that you look for as mispriced in all of this mess. You look for ones with wide scope of service offering. And there are a lot of them that are labeled world computers or layer zeros and stuff like that. Layer ones fail to scale. Layer twos fail to be decentralized. And so you need unique solutions that are long-term. And I think that layer zeros are that solution. And I think that world computers that are layer zeros are the 20-year bull case. All right. So that's what I leave you guys with. I leave you with a long horizon. I leave you with the problem. I leave you with a solution. I leave you with different outcomes. I can't know the future, but I can give my opinion on it. So that's my take. See you guys in the next video. We'll resume our talk on AI and stuff, but I just wanted to give my take on the crypto markets.